Hello and welcome to my channel. My name is Maria Andersen. We talk about crypto, blockchain, money and investments. And today, guys, welcome to my podcast. You will have a lot of insights because I have a super special guest, daily trader Anastacia. How are you today? Welcome.
I'm great. Thank you. Thanks for having me on your podcast. I'm excited.
Awesome. I'm so excited to talk about the ladies in crypto.
Oh, okay.
And especially about, trading, daily trading. This is something that I don't do.
Yes, we've spoken about this before. Yes,
Yeah.
I know.
I'm an investor.
Yes, you're more long term. Yes,
Yeah.
I remember.
So how is it being a daily trader?
Oh, it's amazing. Like the especially with the volatility and the fact that we've been in a range. You know how Bitcoin's been in a range since March? That's actually a dream for day traders. Yeah. So whilst everybody else gets bored, we're just long, short. It's great.
So are you 24/7 in front of your laptop or in front of your phone? I don't know.
No, that's actually, that's a very big misconception. I think because of the word day trading, it sounds like you're sitting in front of a computer. It's like a job, right? But once you understand how the market moves, you learn that it moves at certain times. So you can allocate certain times of your day to trade. So for me, I trade maximum 2-hour sessions and I'll do that 3 times a week. That's my version of full time.
Wow, that's so cool.
Yeah,
you should
little.
Create a book about it.
Maybe one day.
Yes, please do that. Yeah, actually, I have a question also from my audience because I asked my audience from Instagram to ask some questions for my future guest. And I do have, tons of different questions.
Oh, great. I love it.
So one of the questions is actually, how often do you trade?
So, that's a good... So the way that I trade very much in line with how CME futures work. So my trading method originally comes from Forex. And when I applied it into crypto, I noticed that it worked extremely well. And that kind of just shows us that the market makers are the same no matter what the industry is, right? So it's about learning who actually moves the markets. And when I learned that, I realized there are times where we're going to have very low volume because CMEs aren't open. It trades from 5 p.m. New York time on Sundays to Friday, 4 p.m. So in between that time, the market, you have opportunities to trade, but we tend to have very, very low volume once the market closes on Fridays, and through the weekend, it will be very low volume. So that got my weekend back. Okay, so initially I was trading 13 hours a day and I had no idea when the market was going to move. And I always had my laptop with me. And then once I started learning what actually moves the markets, I realized, now I can have my weekends off. I can rest, relax, re-energize and be ready for when the market's open. And then from there, I further then realized that within the week, there are 3 sessions per day. So you have your Asia market makers, your UK market makers, and your US. And so it's in that switchover period when we go from Asia to UK and then UK to US that the market will move the most. And that's usually only about a 2-hour period. So if you wanted to trade every day, you could trade one of those changeovers. So, 2 hours a day. The other method is it's like a swing setup where the market will move in one direction generally for about 3 days, and then it will reverse generally for about 3 days. So if you wanted to trade that trend, you would look for your trade when the market opens, hold that until about Thursday, and then Thursday you look to trade the other way and close out by Friday, enjoy your weekend. So that's the one that I do.
Wow.
Yeah, and I used to do day trading, and my community does a lot of the day trading, but I had to step back and go to the 3-day swing because now I have to run the business and I have to do social media. So for me, it's about managing my time. But that setup is very good for people like me who are busy and cannot day trade. Whereas others who have a lot of time, they will day trade and look for trades every day.
For sure. Wow, you are giving such an insight now. But definitely you did not learn this as a beginner, right?
No, everybody goes through the same journey, and as much as you try to teach people to relax with their trading, the beginning of the journey is you have to go all in. If you genuinely want to be good at it and you genuinely want to make money, I call it the apprenticeship. It's the period up until you actually become consistently profitable. You will dive in deep and you will spend many, many hours looking at the charts, and it's your it's essentially your apprenticeship. You're building up the knowledge because you can learn to trade a million different strategies and you can follow a million traders, but you cannot beat the personal knowledge that you're going to gain from physically doing it yourself. And that just takes time, and you can't rush time, you know? So the more you can dive deep in the beginning, the faster you'll learn and you'll get better at it. But you have to expect to have some sort of commitment if you're going to genuinely make money from it.
Yeah, this is what people don't like, actually.
No.
Because they want immediate results tomorrow.
Don't we all?
To become a millionaire, you know, please tomorrow, 100x, and that's it.
But that's everything in life, right? Like you go to the gym, you want to be 10 kilos skinnier tomorrow. And, you know, like anything worth doing it's hard work.
So how many years, let's say, because I've spoke to different traders and some of them say, okay, so you need 3 years of learning to become a successful trader, at least somehow successful. Someone says, okay, so you need half a year of everyday dedication. What's your opinion on that?
Yeah, I think it's a mix of those two. I think the more time you can put into it, probably the faster you're going to get a result. So it is possible to become profitable within 6 months, but your learning journey will continue, because I always say, like, don't follow, especially in crypto, because crypto is still fairly new, don't follow a trader who hasn't at least been through an entire cycle themselves. Like if you have a YouTube channel and you only started in the bull market, you don't know what to do in the accumulation phase. You don't know what to do in a bear market. You're not an expert yet. You haven't been through those emotions. So really, for anyone who's a trader, the same rule applies. Sure, you might be able to become profitable in 6 months, but that 6 months is only going to be one part of the cycle. So you have to expect that you're going to have challenges when the market changes. So expect it to be a 4-year thing, but that doesn't mean you can't make money before that.
That's
you know?
it. So too much time.
You just have to fall in love with learning the market behaviors. If you can do that, then it's okay. You can start making money sooner. But if you don't have a lot of time, then it will take you longer. And I also think besides time, the biggest reason that it could take you longer to become profitable is your brain. If you haven't managed your emotions around money and you haven't learned to deal with fear and greed, it will take you longer. Psychology is a big part.
Main two emotions in trading, fear and greed. Unfortunately, or fortunately, what can we do? We can do nothing about that.
So, the faster we learn to manage it, the better chance we have of becoming profitable.
100%. And I actually also have a question from my audience about bear markets, because someone asked me, is it possible to stay daily trader when it's bear market?
Oh, yes. You make more money in a bear market.
Wow.
Yes.
Why?
Okay, good question. So the thing about day trading is the price of the asset and the direction of the asset is irrelevant, right? I don't care if Bitcoin's going from 15 to 30K. Like, that only matters to me in a bull market where I'm holding it spot. But in a bear market, even in a bull market, but when you're day trading, all you're doing is trading the value of the asset for percentage gains. So all you have to do, your job as a day trader every day, is just to get the direction right. You know what I mean? That's it. You just got to get the direction right. So it becomes irrelevant whether the price is going up or down. You practice good risk management. And in a bear market, the reason I say it's better and you can make more money is because, I mean, I'm sure you've seen like the huge red candles that come, the big liquidation hunts. Like, price moves to the downside much faster than it tends to move to the upside. So it's great. I love the bear market. I work harder then, and I work my most hardest in the accumulation phase at the bottom when no one's interested.
Wow.
That's when I work very hard.
Wow, that's so cool.
Yeah.
But do you actually hold some portion of Bitcoin or you just trade all of it?
Yeah. No, I'm a big believer in Bitcoin. So I'm always, my purpose to trade is always to accumulate more Bitcoin.
So you kind of set aside some portions of Bitcoin, accumulate DCA.
Yes.
And the other part, some percentage of your portfolio you trade. So you don't trade all of it as many people do.
Yeah, no. And I also have an altcoin portfolio in the right part of the cycle. Yeah.
What about Memecoins?
I have a few, but I would not put as much money into but I don't think you need to either. Like proportionately, you don't need to put as much money into a meme coin as like a large cap. So
that's super risky. Guys, don't invest in meme coins if you don't know anything about them. And those are super risky assets. Don't. Just don't.
And don't leverage trade them.
Yeah.
Don't leverage trade them.
Tell us about that. What not to do with meme coins.
Yeah. I think if you like meme coins, I'm not against them. You know, they have been making a lot of money this cycle. They are popular. And if you're here to profit, then it makes sense. But you're going to be safer off buying them spot when they're cheap and just holding on to it whilst the trend remains bullish, than trying to leverage trade them. I think the combination of meme coins and leverage trading them is probably where you will more likely go backwards than forwards, especially if you're not a confident trader, you know, because when we do have those liquidation hunts, they tend to be a lot more dramatic on coins that have a low market cap. You know, so we just have to be aware of that. But if you're holding them spot, you can ride through that in the right part of the cycle. But leverage, you'll just get wiped out. So it's not worth it.
Yeah, for sure. So mostly you trade only Bitcoin, Ethereum, and what else?
I will leverage trade altcoins when the right things are happening. So I have the right combination of what Bitcoin is doing and what Bitcoin dominance is doing. So if I have a good combination of that, then alts will fly even more, so I'll trade them, or they will dump even harder, so I'll short trade them. But if I don't have that combination, then I just trade Bitcoin. And when you're leverage trading Bitcoin, there's enough money to be made. Like you really don't have to continue going down to the bottom of the barrel to make money.
This is what's very, very interesting point, because you know, some newbies, in crypto, they think, I need to trade or invest in every single altcoin out there.
How do you manage it? You can't. That's another thing. Like if your portfolio gets too big and you have too many coins, how are you going to manage them all at the same time? That's how you end up becoming a bag holder in the end. Right?
And lose all your money then, and then cry. Oh, I lost.
You're
all
like,
my
will
money
they come back?
Crypto is a scam.
And then you wait till the next cycle. But the thing is, the coins that you bought this cycle, no one's going to care about next. They're never going to come back. You know, so most of them will never come. Most of them will not last 2 cycles. So you really just Bitcoin.
So for a beginner, let's say, because we still have many people who are just new to crypto, they are coming to the space, and some of them are coming thanks to meme coins, and they starting to discover altcoins, then Bitcoin, but they came actually thanks to meme coins into the space. So for a beginner, what would be a perfect portfolio? Let's say, let's not maybe name coins, but let's say how many coins should be there in the portfolio? What percentage of Bitcoin should be there? Because again, also different traders and different investors, they think differently.
Okay, we can dive into this because my answer is probably going to be different to most.
Okay, tell me, 90% Bitcoin, the rest, nothing, like whatever you want.
So let me answer the question about how many. The answer to that is how many you can handle and genuinely manage. So it will come down to your lifestyle and how often you can track the coins that you're invested in. I personally won't really I have about 20, 25, but that is on the high end for me. Like I personally would like to reduce it, but I have them mostly for my community, you know, for them to have options too. So I do track 25 coins a week. But ideally, if I had my way, it would probably be 10, 15. So that's number one. Number two is the proportion. So I know that a lot of people, especially when you come into crypto, believe they're not going to get enough of a multiple on Bitcoin, and therefore they don't see a reason to own it. I totally understand that, but I want you to think about it a different way. The fact of the matter is there is now, over 2 million altcoins out there.
Oh, yeah.
Yeah.
And, tons of different meme coins.
Ridiculous, right?
Millions.
Like last cycle, there was 200,000. So it just goes to show how much we've grown. And it's not possible for liquidity to come into 2 million altcoins in this cycle. So some of them are going to do nothing. They are going to go to zero. Even though Bitcoin won't make you the biggest multiple, it acts as your protection for the coins that you're going to get wrong, because we're all going to get coins wrong, right?
Of course, even professional traders, investors.
At the end of the day, we're just taking a risk on something that we think might do something, but it may not as well. It's equally may not. So by owning some Bitcoin, it will forgive the mistakes of your other portfolio. So think of it like that. And then when you're deciding the percentage, it's going to be a different answer for everyone. So I would never give anyone a flat, you should have 10% Bitcoin. Mm-hmm. It comes down to the risk that you can afford to take according to your age and your disposable income and your responsibilities. Mm-hmm. So the younger you are with the least responsibilities, the more time you have in life to recover, which means you can take a higher risk. The older you are, unfortunately, right?
What can we do with that?
What can we do? We have to be more conservative. So an older person with responsibilities and maybe not a high disposable income will need to be heavier in Bitcoin. Because, of all cryptos, we know Bitcoin, it's going to be okay. But a younger person, they have time in life to recover. Yeah.
But anyway, you are telling about income. So those people who wants to start investing in crypto, they should have a stable income.
Mm-hmm. I'm actually a big believer. So many people say to me, I just want to be a full-time trader. And I'm probably one of the only people out there that say, like, don't aim for that. Yeah. First of all, I'll tell you why. So prior to trading, I had a business. It was a very large business in Australia. And I lost my passion. All this stuff happened. I ended up losing the business, and that's why I turned to trading full time. And it prior to that, it was just a hobby. But I didn't want to start another business, so I thought maybe trading can be the thing that I will do. And so I really dove deep into it, became profitable, and decided, okay, this is the thing that I can do full time. And so I did it full time, for 6 months. And in that 6 months, because I was able to make money just from a computer screen, I didn't need to talk to any human, because I didn't need a customer, I didn't need a boss, I didn't need anything. Do you know how depressing that is?
Yeah.
Right? We need people.
Like in prison,
Yeah, we need people. And I was so bored. So I was making money, but I was so bored. And, it made me realize, like, there's two things that we should aim for in life. And money's not, like, the only thing. Like, money is great because it helps you live the life that you want to live. But you also have to be fulfilled. And if you're only making money and you're not fulfilled, you can be miserable. And so that's where it comes from. People say, being rich doesn't mean that you're happy, right? Yeah. Because those people would not be fulfilled. So, and people fulfill you. Doing good things for the world fulfills you. So you need something else. You can't just sit at home and make money and be happy. So that was the one thing that I realized, and that's why I ended up creating a YouTube channel and a community and everything, because it was fun to be able to share my knowledge.
And to have this feedback, to have your own community. By the way, we will leave all the links in the description, guys. Go check it out. Follow. Yeah. Right now.
Thank you. And so I always tell my community, like, don't aim to be full-time as far as trading being the only way you make money, because besides it's boring, it's also, it's boring, and it puts a lot of pressure on you, because there can be times where 3 weeks will go by and there just isn't a trade, so if you're relying on that income, how are you going to pay your bills? So it's good to know it's a supplementary way to make additional income, but it shouldn't be the only way you make income. And so I always encourage my community, like, if you don't like your job, find a job that you like or start a business, but always have multiple income streams, you know, I'm sure you've heard the saying, they say that millionaires have at least 7 income streams. So why should we only have 1?
Yeah.
You know?
We should have 8.
Yes.
Yes. Okay,
Exactly.
So cool.
Yeah.
Yeah, I know what you mean because I have 100% same thoughts. And I also do have a lot of questions from my community. Hey, I want to become a full-time trader, full-time investor, and live only thanks to crypto. I mean, pay your bills and do everything.
Yeah.
This is not what works.
No,
right?
it's not. It's not. You have to do something in life that, makes you happy as well. And usually having a business is the thing that makes you happy because you will usually start a business from something you're passionate about.
Do you have a huge crypto community in Australia or not that huge as in UAE, in Dubai?
I think my community is probably still bigger in Australia because that's where I started.
Okay.
But moving to the UAE, my community, like my US community and my UK community definitely grew a lot because now I'm on a different time zone. My videos go out at a different time. Yeah. So it gets to them. But the old Aussies from, when I first started, they're all still there and it's cool. It's amazing. Yeah.
So cool. Yeah. You create amazing content. And if I would be a daily trader, I would definitely track all your trades. But I don't do that because, just not my thing. And that's fine. Also, you can still be an investor and be in crypto space, right? You don't have to be a trader.
Yeah. There's many ways to be involved in crypto and make money from it.
Yeah, for sure. So you said that you kind of track all the tokens in your portfolio. How do you track them? Can you tell us? Is it only looking at the chart? Is it only, I don't know, checking the news? Is it something altogether? Tell us. How do you research? How do you track?
So I am just a price action trader. So I don't really tend to worry too much about the news or the economy or things like that because I'm going to see it on the charts first. Like the chart will usually tell you before any news comes out.
Show me the chart and then
exactly. So you can usually preempt it. And I also find that if I get caught up, worrying about what's going on the news, it can skew my opinion of what might be happening, and so it's better for me to just stay away from that. But I just have like a once a week ritual for my altcoin portfolio, and I only chart those on the daily time frame. And it's very simple. Like I'm looking at Bitcoin dominance, USDT dominance, and all the other altcoins that don't include Bitcoin. And I'm just looking where the money is shifting. So, if Bitcoin dominance is rising, then that tells me any altcoins I have, I need to chart them against Bitcoin because I need to know if they are bullish against Bitcoin, they're worth holding on to. But if they're not, it's an opportunity loss because that money is better off in Bitcoin. So I'm looking at that first. If I see the money shifting to USDT dominance, then people are starting to become risk off. For some reason they're selling and maybe I should be thinking about that too. And if it's moving into others, then yay, alt season, which we've been waiting for since 1965. But anyway, it will come. And then once I've done that, then I go and chart the individual coins in my portfolio. And like I said, I chart them against Bitcoin because, if they're not bullish against Bitcoin, then there's no point in holding them. Yeah.
So you're shorting them?
No, I would do nothing. Like if they weren't bullish against Bitcoin, I may consider de-risking if I thought they were going to drop a lot, or I always dollar cost average into my altcoin portfolio. So I always have like dry powder ready. If I think, it's going to drop more and it will be a good place to buy, then I might pull the trigger on a buy. But I'm not short-term trading them. I'm just accumulating them at the lows as long as it looks like they're close to bottoming out against Bitcoin. But if it's just lower lows, lower highs, lower lows, no, you're just throwing money away.
Cool. So talking about technical stuff, what's your favorite indicators? Because I do have these questions from my audience. They wanted to know, do you use any indicators or you don't?
Yeah, I do. So I use indicators that are very much volume based because, again, like I said, if I'm trading and I'm wanting to know where the market makers are making their move, the market makers bring the volume. So I need to see that happening. And we designed all of our custom indicators to be able to trade, you know, the method that I trade. And they're private indicators for our community, but you can get similar ones that are free on TradingView. So one that I really like is called PVSRA. And it changes the colors of the candles according to the volume that is coming in a ratio relevant to the prior 10 candles. So why do I care about that? I care about that because if a candle's volume increases by 200%, by, you know, over the average of the last 10 candles, then only market makers can bring in that much money in one candle. Right? Like a retail aren't calling each other and going, let's buy now, and just, you know, that doesn't, that's not happening. So it's, whilst it's not a proven thing, you can make the assumption that that's big money moving in that direction, and therefore we want to follow the big money. So that's where you take your trade.
That's very smart. So is it enough to use just one indicator? You have to use several.
I mean, people can like naked trade. Like you don't have to have indicators, but you know, I just, like I said, I learned the method from Forex, and there were certain indicators that they use there because it's all based on algorithmic trading as well. So algorithms have to be coded off an indicator. So if you know that indicator, then you will know where to look for certain moves to be made.
Interesting.
Yeah.
And for those also newbies, because we do still have a lot of newbies, is it important to learn, let's say, basics of technical analysis, or in your opinion it's just enough to follow professional trader and his or her steps and that's enough? Or is it important also to learn those basics, to read some books, maybe to have some trading courses, I don't know, whatever? What's your opinion?
I think if you want to take trading seriously, books can help. I'm not a reader, so I'm totally giving advice that I haven't taken here. But books are valuable because a lot of them will talk about the psychology of trading. So it's really important that you get that right first, and books can help you there. As far as like learning the actual technical skill, the technical skill is not really that difficult. Like I said, the most difficulty comes from getting your mind right and ready for it and being able to deal with emotions. But it doesn't matter what trading strategy you learn. They're not all that difficult, but they're going to be hard until they get easy because that's the learning process. That's your mind going from knowledge to wisdom, and you just have to embrace it, you know. So, you know, the best way to start, I think, is to just watch traders on YouTube. It's free content, you know, and one of them will resonate with you. One of them, when they speak, it will make sense to you what they're saying. And then try their strategy.
You can just watch, not even trade. You just can watch every single day
and
for
learn.
at least 1 month, and then you will start to understand if you're just a beginner. Okay, and what about mindset? What people that are coming into the space should change in their mindset? We were talking about risk tolerance. What does it even mean, risk tolerance? How much I can afford to lose, or what do you mean?
So I think that the one big thing that you're going to have to get used to is in life, we're taught to not be wrong, right? We get rewarded when we get things right. You know, we get straight A's and our parents are happy. And if we don't get an A, they're like, you know, so it's just in life, we're just taught as humans that you're more valuable if you're right. Whereas when you learn to trade, you are a victim of the market, and the market is always the boss, and it can do whatever it wants to do. And you have to learn that you're not going to be right 100% of the time. It's absolutely not possible, but it also doesn't matter. Like, you can make money being wrong. And well, not but just being wrong. Sometimes you have to be right.
Yeah. If you want to make money, or you can just be wrong and stay in the market.
And that's what risk management means. So it's about, you would only risk a certain amount of your portfolio per trade that you take, and you have to learn how to calculate that risk. But ideally, you don't want to be losing more than 1% of your total trading account balance per trade.
Okay.
If you limit it to 1%, especially while you're learning to trade, you have hundreds of chances to learn.
Yeah.
But if you're doing, for example, 10%, after 10 trades,
you're done.
That's it. You're done. Now you got to pour in more money. So you want to give yourself as much time as possible to learn and understand what's going on and start making money. So the 1% rule is really good. And then there's this other thing called risk to reward. So, for example, if you were to have a 2-to-1 risk to reward, then if you were risking 1%, you would expect that you're going to make 2% on that trade if it goes the right way. So you have to learn through doing technical analysis whether it's likely that the trade you want to enter is going to hit that take profit level. If not, you have to have a strict rule and say, I'm not going to take the trade because that's my minimum risk to reward. And so by doing that, it means you don't have to be right 100% of the time. Like you can get, some wrong, but when you get the ones right, they're going to make up for the ones that you got wrong.
Yeah. And that's also fun, right?
Yeah, you just have to be okay with it. And when a trade doesn't go your way, you just have to be able to accept it and not feel like you're not getting it or that it's you or that you don't blame yourself. The market just did what the market did and you're in your process of getting better at understanding it.
Yeah, you just take the next step and move on.
Yeah.
And how not to be greedy in trading. This is very important because most of the people, they lose money, not because something went wrong, just because they got greedy and they just got greedy and greedy and greedy and that's it.
Yeah, and never sold. And I think that's probably the next phase that we're about to move into, right? Because once we go into the parabolic phase, everybody will become an expert, even if they just started last week. So, and you think you're invincible because it doesn't matter what you buy, you're making money. And what you don't really realize if you're new is that it's not because you're invincible. It's because you're just in the lucky part of the market, which is again why I said you need a whole 4-year cycle before you can really say you understand the market. So I think in this part of the cycle especially, like you have to get used to taking profit. And I think it feels really good to take profit. This is what people don't really grasp because they want to just hold on to things forever and they think that their $100 is going to turn into $1 million if they just keep on. I wish, right? But I guarantee you, especially if you learn to short-term trade, if you close your trades on Fridays before the market closes, you will have the best weekend. You really will, because you can be free of the chart. You don't have to watch anything. There's no risk of your trade turning around on you. You made your money for the week. Think of it like a job. You made your money for the week. You got paid. Now you can enjoy your weekend. It's the best feeling.
Yeah, amazing. That's so cool. So it's the best way to take profits, actually. Right?
Yeah, well, we don't make money until we take profit. There's one thing I say to my community a lot because they get really stuck on which exact candlestick should they enter a trade on. And I say to them, you don't need the perfect entry. You need the perfect exit because the exit is where you collect the money. Entry, don't worry which exact candle. As long as it around about looks right and the risk to reward is good, go.
Yeah, that's true. 100%. This is what I also recommend to my community. And if you just trade on spot, let's say, what would be the point of taking profits? Do you recommend taking profits when it doubles? When it comes to Memecoins, let's say, or altcoins that are very,
So with spot, my goal always is to de-risk as fast as possible.
Okay.
So what that means is if I buy an altcoin and let's just say I bought $100 worth of an altcoin.
Yeah.
Once that coin has moved 100%, that I've doubled that money, right? So I now have $200.
Yeah.
So I take my $100 out,
Yeah.
and I'm leaving the remaining 100, which is only profit. I'm leaving that in the coin if I think it's got further to go, which in this part of the cycle you would hope it has more to go than, right?
This cycle,
Yeah. And then, and that way it doesn't matter if it swings around. Like the only thing I'm giving back is the profit on it, which would suck, but I haven't actually lost because I've taken the money that I put in back. And then if it keeps going, at every 100%, I will take a little bit more off. And that way, when we eventually reach the blow off top, because no one can time that.
No one.
Yeah, no one can. A lot of that profit will be taken already, and there may be something left in the coin. And when we have that big 50% drop, it's not going to matter because you've collected most of the money along the way. But that strategy, it's only a bull market strategy. You know, I don't buy altcoins in the bear market or like at the bottom. Yeah, no. I only buy them when they've bottomed out against Bitcoin, which usually is alt season and very long after Bitcoin is in a clear bull market.
Cool. Okay. So cool. So I think I asked you almost all the questions.
Awesome.
And maybe any final wishes to our audience before the upcoming bull run?
Oh, wishes? Well, I hope everybody makes a decent amount of money and I hope you walk away with it, because that's one of the biggest issues is becoming a bag holder when it's over. So I hope you genuinely make a lot of money from this cycle.
And keep those money.
And keep the money. Yeah.
Yeah, okay. Thank you so much for this podcast.